The world's oil exporters surprised markets this week, announcing a larger than expected hike in output. The Saudi-led alliance OPEC and its allies said they would pump an extra 648,000 barrels of crude out of the ground every day starting July. That's 50% higher than this month's increase. But oil prices still shot up, with investors viewing the adjustment as too small for a growing economy increasingly thirsty for crude. One issue is Russia, the world's second largest exporter of the commodity. Its output has fallen by around 1 million barrels a day since its attack on Ukraine began. Another problem is that several OPEC members, particularly Angola and Nigeria, have been unable to produce what they've promised. Still, the White House, currently dealing with soaring consumer prices in the U.S., praised the OPEC move.
We do welcome the announcement today, we welcome the important decision that OPEC Plus made to increase supply by more than 200,000 barrels per day in July and August, based on new market conditions. That's the analysis that they make, right? That's for them again to decide. This announcement brings forward the monthly production increase that was previously planned to take place in September. The United States will continue to use all tools at our disposal to address energy prices measures.
Now, for more, let's hear from energy analyst Sophie Unubasceanu, who says oil price hikes will be difficult to stop.
What I can say for sure is that at the moment, it looks like the trend is pointing upwards. So we do have this, let's say, tight market on one hand. So far, we've had almost like a bit of a buffer because we've had the health crisis, let's say, really rife in China. So coronavirus restrictions were weighing on demand. The seasonality is something that we also have to bear in mind. So now that we've had Shanghai lockdowns are being lifted. We have summer around the corner, meaning that demand for oil and basically for gasoline and by connection for oil will be increasing because of the summer driving season. So all of these different factors mean that we will be seeing some strength in the market, and that is one of the key things. It seems like Brent prices have kind of pushed further and further. This week we have seen some, as I said, peak inflation expectations as well, combined with these easing lockdowns in China. This helped equities strengthen and the dollar weaken. Now, obviously, this let's say pressure in US dollar has been keeping buying interest for oil quite rife. So again, this is just another factor that's adding in support. Longer term, it is a case of seeing how things evolve. At the moment, sentiment in the market is pointing towards bullishness.